The Federal Reserve hikes interest rates as regional banks continue collapsing. There's Memecoin mania, and which payment giant activated a new crypto on-ramp. Welcome back to the Collective Shift Weekly Recap. We've got actionable insights and a breakdown into the crypto market, all in under 30 minutes. We've got a lot to get through. Let's start with the latest with the current banking crisis from Nick. Nick, take it away, my friend.
Yeah, thanks, Leon. It actually happens as soon as we finished recording the last episode when we were talking about First Republic Bank, which was teetering on the edge, potentially looking for bailouts or some sort of intervention.
Yep.
And we're sort of waiting to see what was going to happen. And, as always happens, I think, with recording, as soon as we finished, big news broke and we saw that they got bought and JP Morgan stepped in with the help of, the Federal Deposit Insurance Funds to help, stabilize and take on those assets from First Republic Bank. So we saw JP Morgan get even bigger and basically just these regional banks continue to see massive outflows. Following this news, we saw a lot of the smaller regional banks, some like PacWest in the US, which dived in a lot to end the week in the share market. So massive pressure that potentially we may see more First Republic banks start to happen again. I certainly don't think it's sort of the end of this crisis. We'll probably see more pressure on these other banks because now massive questions are being asked in the market about, are we going to deposit all deposits now in the market? What's going to happen? Do we need more government intervention? So I think we're going to see a lot more, and things only got worse for these regional banks because rates have increased by, I think, 25 points. So the federal fund rate is now above 5%, and this is the highest since 2006. Now, I think we can put up a chart that shows that we're directly in line with the rates that are happening from 2006 to 2007. And we all know what followed then. We saw a lot, and the biggest global financial crisis, for about 30, 40 years. So I'm not saying this is going to happen again, but we're just seeing that things are aligning in a certain way. And I think Fed is really stuck in a really hard place. Do not envy this job. I don't know about you, Leon, but I'm glad I'm on this side and not in charge of, securing the entire financial future of the US.
That's right, man. He's stuck between a rock and a hard place. And as you were saying before, I don't see how this can't keep happening because we see the data, we see all the money flowing from all the regional banks and people getting scared because they feel their small bank is going to go out of business and they don't have access. And so they have to flow on to the larger banks. But as you said, this is our interest rates that we were looking at before. And we can see here, the interest rates currently is sitting around the 4.83%. And we can see that it's a lot higher than it used to be. And it used to peak at this same time period in 2007, 2000, and even 1997. So it's getting really high up there. And I'm sure a lot of the businesses in today's age aren't equipped to actually handle this sort of interest rate hikes.
And that graph's actually, that is above 5% now as well.
Yeah.
So I'm really keen to see in the market exactly what happens because at the moment there is a lot of lack of confidence. And it's all a confidence game. So we'll just continue to see whether we're going to see massive bailouts. We'll see universal guarantees of deposits because as we know, deposits are only guaranteed up to 250,000.
Yep.
So if that changes and we see new legislation comes in that possibly changes that, that's going to change the entire game that, you then are basically funding everybody's deposits. And I guess it creates this weird situation where why wouldn't you want to take on more risk than if you're guaranteed your deposits? And it sort of just doesn't make any sense. And a lot of people are suggesting that perhaps we're going to see more a looser monetary policy like we saw during COVID. So if that's the case, I think it's creates this interesting inflection point for Bitcoin heading into the next halvening.
That's right. And we'll take it back to basics, Nick. Whenever I hear this, where is all of this money coming from? These bailouts, the government just prints money to give it out to people in the most superficial sense, right? They have their schemes behind the scene. But to me, all I see is this hard asset on the other side of the aisle, 21 million Bitcoin. It doesn't get inflated away. No one can take it from you, that sort of thing. And I'm like, I'm so glad that we have this alternative money supply and you can take out your money from the system and keep it yourself. So that's what I see. But from the superficial level, I just like that,
Yeah, and I think maybe we're getting a bit, bearish here with a lot of regional bank failures, but maybe jump into another big positive we saw in the market with Stripe.
That's right.
one of the biggest payment processors, one of the biggest fintech companies out there have now unveiled their new crypto on-ramp, which I was super excited to see. I'm not sure about you, Leon, but for me, it just means that these big names who were dabbling into crypto in 2021, 2022 are still in the game after the horror 2022 that we saw. My biggest fear in the market was potentially these big names will be scared off by the collapses that have happened, and they may start to wind back their crypto programs. But it's kind of the opposite of what we're seeing here. Is Stripe have actually doubled down and opened it up to the public now, and this just makes it easier for any crypto application to embed a Fiat Onramp through Stripe, and it just means that hopefully we can get much more usability into the market.
Yeah, so basically to dumb this down for guys out there, what it basically means is that you will be able to have this small widget or application you can embed into your either website, into your application, into your dApp, for example. And this gives people a direct fiat line. So they don't have to go somewhere else to purchase crypto and then come over here. They can do it with the Stripe application or plugin into your website. And that kind of reduces the amount of friction. And we all know in today's age that the less friction you have, the easier onboarding experience you're going to have for people. So I'm really excited for this to happen. And we know that Stripe has been working towards this for a long time, but I'm really glad they've come out and announced this. And I'm sure they've got other things up their sleeves. So do other companies out there. But I'm really, really happy to have seen this come out, Nick.
Yeah, same. So we saw Visa as well. We talked about in the program last week. If you didn't pay attention to that episode, they were doubling down on their crypto roadmap. So a lot of big Web2 payment processors and companies that are in the payment space are really going for this. And one thing to look forward to is PayPal. PayPal actually stopped issuing they were going to issue their stablecoin in the market.
Yeah,
it was going to be like PayPal coin. But they've stopped because of regulation and potential issues that they don't have the real clarity to unveil that. So I reckon if we see PayPal start to unveil their PayPal coin, then that's just going to be another tick. We got Stripe, we got Visa, and now if PayPal enter the ring again with their own stable coin. We're seeing these big brands do it in really different ways, from making the on-ramping easier to then going all the way to issuing your own stable coin and doubling down on like these crypto rails that we like to call.
Yeah, it's like just attacking it from all different vectors. One might work, one might not work. So you got to hedge your bets sometimes. And I guess that's the nature of competition, right? One company will do it and fail. Then another company will come along and say, hey, they did it wrong. We're going to do it this way. And then we're successful. That's nature. But let's talk about Bitcoin, for example, at the moment. So Bitcoin has actually had a ginormous week in the last couple of weeks. Ordinals, the NFT group, NFT fanatics on Bitcoin have driven Bitcoin fees through the roof, Nick. I haven't used the Bitcoin blockchain in quite a while because I only stack it and put it away in my cold storage. What have you noticed about the fees? We've got a chart here just to show people what it actually looks like now. It's incredibly high.
Yeah, we actually had a good post on our member platform talking about how the Bitcoin mempool, which is basically just the waiting room, when you think of how you go to the doctors, how that operates, the same thing happens with Bitcoin. If you want to come in, you go into the doctors, but you don't necessarily get seen right away. Maybe if you be sneaky and you pay the doctor an extra bit of sum of money, then you get seen right away. But if you come in and you don't want to pay, or you pay the minimum, then you have to sit down and wait for your turn to get your transaction processed. It's the same concept of how Bitcoin works. So we're seeing that there is actually a surge in what is called inscriptions. It's just basically creating arbitrary data and embedding it on the Bitcoin blockchain. And this was only recently because something called I think it was in 2021, there was a big upgrade to Bitcoin that allowed for this to happen. In the last year, we saw different uses of Bitcoin, people, putting lots of different data. So we've seen a lot of different people start to embed data on the Bitcoin blockchain, which is driving up fees for everybody.
Yeah. I guess the problem with this is that, it's not a data efficient space. The blocks are very small. They're getting quite expensive. As Bitcoin goes up in price, the whole fees goes up in price. So it's not optimal, but at the same time, it is a free open network, Nick. People can come and create what they want on the Bitcoin network. If they're happy to pay the fees, they get to pay the fees, right? That's how it is. Yeah, it's really interesting to see. But I guess at the end of the day, I'm happy that people are using Bitcoin. What else can we say?
Yeah, and it's
But
not just a Bitcoin problem too. I'll just add into that. We saw that
yeah,
ETH is experiencing exceptionally high gas fees. I think the highest gas fees for a year. And I went on today, and it was, I think, 20 US dollars for a Uniswap transaction on Ethereum on the mainnet. So it's not just Bitcoin that's experiencing high fees at the moment, but it is Ethereum who is seeing a surge in activity, which is good for ETH burn, which means that as more activity is on the chain, then this results in a higher degree of Ethereum that is being burnt and taken out of the supply. And this is what we are seeing as like the supply change. So massive issue there for Ethereum, who has really been in the news just for all the wrong reasons, I guess, because it's a positive that people want to use Ethereum, but obviously it's a negative when you can't even make a transaction unless you're really high net worth individual.
Yeah, that's right. We see a lot of these lower net worth individuals just being completely pushed away from Ethereum mainnet, and you might have to resort to going to a layer 2 solution or something that's not an EVM compatible chain like Solana that has quite cheap fees. But at the end of the day, it's still good for Ethereum because it's still an open network. People can come on and play with their NFTs, and if they're happy to pay the gas fee, what else can you say?
And just to add on to that too, one of the main reasons, I guess, is that people in the Ethereum camp are probably have the opinion that it's not necessarily the be-all, end-all, is because I guess this is why these layer 2 solutions were created, that there's still going to be high gas on Ethereum, and it just creates the incentive to bridge or to use these other networks if you're not engaging in, I guess, deploying a significant NFT collection or any real high worth trade or settlement. If it's something small and you want to get involved in, obviously just go to Arbitrum, Polygon, although it's not technically an Ethereum secured chain at the moment, or you go to Arbitrum. So there's these other solutions that hopefully people can get pushed onto when they're seeing those high fees, and that's how we can hopefully see the fees decrease and people get a better experience overall.
Yeah. And like speaking of the fees, I was just actually noticing this here, and I did read this as well. A lot of the fees are actually coming from one DeFi application, which is called Uniswap. It's the biggest market maker, AMM, automatic market maker on Ethereum, and it's guzzling up so much fees. Look at this, 33,000 in ETH. And then the next one is the older version of the same application, which is Uniswap V2. It's crazy. And you can see over the whole year period, we have Ethereum being minus 1% supply growth. So it's actually deflationary if you look at it from a yearly point of view. But yeah, that's crazy, Nick. There's a lot of good stuff happening on Ethereum. I certainly can't transact on there. I may have to be using some Ethereum layer 2s. Let's move on, though. Yeah, let's keep going.
Yeah, and the main reason, I think, was because of these meme coins as well. We saw a lot of meme coins take the spotlight this week and the last couple of weeks, and that also contributed to really high gas fees because a lot of people were trying to degen and get involved in a lot of these really obscure meme coins out there.
Let me guess.
Pushing the prices up really high.
Let me guess. I've heard it before. It's Pepe and Turbo. I've heard these two on social media nonstop.
Yeah, we're seeing a return of the meme coin, which is I'm not sure if it's a worrying sign. I think for me, it's a bit of a worrying sign. Maybe these are the people that got a lot of airdrops possibly, or they're being very bored, or I'm not sure what's going on in the market, why these are surging so much. Maybe it's euphoria, which is kind of a worrying sign.
Yeah.
But one thing I'm concerned about when you see a lot of these meme coins start to skyrocket, you see these things swirling online, because at the end of the day, they don't provide any fundamental value.
They don't do anything
except for just trying to get your money out, which is not a good sign and not a legitimate cryptocurrency in my mind.
I definitely agree there, mate. I never see them as actually having any base utility. They're there for a small 5-minute entertainment hype cycle, and then they're gone. And you don't see them ever come again. But as always, we see on social media, people make millions of dollars from this. Don't ever believe those guys, okay? If you look at their wallets, they probably spend millions of dollars trying to get the right SHIT coin, and one of them may get lucky. They still end up losing money anyway. So you're
definitely got to be careful on who you see on those as well, especially when you see people pumping up some meme coins.
Yeah,
it's always important to understand who's on the other side of that as well.
That's right.
And these have skyrocketed in value. Like they're getting up to, I think, 100 million, and then even a billion. Like,
yeah, the valuations
serious
of
people putting money into these coins.
yes,
And
that's
it's
right.
not just small retail people or small traders. There's obviously sophisticated people in the space who are, capitalizing on these.
That's right. That's right. And I'll bring it back to for everyone. Make sure you check out the Collective Shift platform. We have the basic security measures you'll need and the basic information and education for you to avoid all of this. Shenanigans in the market, so you can just rest easy. Because when you put a whole bunch of money in this stuff, you can't sleep at night. Okay, you just can't do it, and we want you to have a good night's sleep. Yeah, so that's what's happening with meme coins. I myself, I'm not too impressed. As I agree with you, it's a little bit too frothy for me. But let's move on. Let's move on to the United States. The United States is still having issues with crypto at the moment. Biden came out and he's actually proposing a 30% tax on Bitcoin miners. That's like industry breaking, Nick. What information do you have on this?
So they come out and have released a lot of frameworks and a lot of treasury and briefings and a lot more hard written reports about how they're going to tackle the crypto industry. But for this, they actually come out and saying that we're going to tax the energy that crypto miners are using or capitalizing on up to 30%. So it'd be incremental. It won't be 30% right away, but it'd be up to arbitrary targets and measures depending on how much you use electricity and over what time. This is only a proposal though, so it definitely isn't anything that's coming soon, because these things will take a lot of time to process and pass through the appropriate channels. But it is just another sign of the complete hardline approach to cryptocurrency in the US at the moment. And it just brings up this whole issue of you're just forcing, I guess, more crypto miners offshore. Because as we saw with China, they banned crypto miners in, I think it was last year. And it just meant that a lot of the hash rate, the computers that are mining Bitcoin and securing Bitcoin moved to the US. So we saw a really big shift in the hash rate, and a lot of power went into the US with a lot of crypto miners moving there. So if this gets introduced, we're probably going to see them move away now to other countries such as Russia, who actually have state-sponsored mining operations, who are mining Bitcoin as we speak, which is a whole nother geopolitical topic to get into, and potentially like a new catalyst that's coming for Bitcoin. But yeah, crazy. But actually, not everybody is for it. I saw a presidential candidate.
So there was a presidential candidate that came out and actually had some words to say, didn't he?
Yeah, this was Robert Kennedy Jr. He actually come out and said that Bitcoin is actually quite an innovation, and this 30% tax is wrong. So we're seeing someone who has actually got a lot of political weight and moat that's going to be coming up and challenging for the presidency. They're actually sort of contending against this, which is good to see that it's not all doom and gloom, but we're actually seeing some strong candidates come out and actually fight back on this harsh crypto.
I love his quote. I'm going to quote him just for a second here if I can. Yes, energy use is a concern, somewhat overstated, but Bitcoin mining uses the same as video games, and no one is calling out for a ban on those. That's kind of true. It's like, that whole argument of Bitcoin using the same power as dishwashers around the world. Like, really? Come on, guys. We can do a lot better when we're trying to articulate these arguments. So yeah, it's very interesting to see other politicians coming out against this whole Bitcoin mining thing. But it'll take bipartisan support from either side to pass any kind of regulation like this. I think it's too big. But Nick, let's move on to some other project news at the moment. So Sui blockchain just launched, and do you have any idea how it went? I didn't actually catch it myself.
We saw it sort of start off slow, but the main news here was the token just absolutely moved higher, and we saw people who were in the public sale and a lot of investors actually, I think it was went up 30x. So the blockchain itself, I'm actually struggling to understand any applications that have deployed on there or any real big use cases that separates it from anything else, which kind of worries me. But maybe I'll love to be proven wrong to see any more applications on these new age blockchains.
Aptos and Sui.
There was a big hype thing. I remember a few years ago, people would call these next generation blockchains, which was the hype word at the time. So we'll continue to see if things like Aptos and Sui will challenge Solana for an alternative to Ethereum in a way, to create a blockchain that can scale to thousands of transactions.
We'll have to wait and see, because it'll take a while for them to prove themselves. And just for all the listeners out there as well, just again, this is not the time to be aping in and buying the SUI token. It's not financial advice, but at the same time, look and do your research, come to Collective Shift and find out how much the private sale got their tokens for, like cents on the dollar, and now it's worth a lot more. So you're buying it from someone not too long ago who got it for cents and cents. So it's not the best place to be in, especially when you want to try and increase your return on investment here. But yeah, there was also some news on here about an NFT marketplace as well. They debuted a lending product. This is something we'll keep an eye on just to keep track on and see how the blockchain is doing in general. If you do want some videos on SUI, make sure you do leave a like and subscribe, as well as leaving a comment in the section below so we can get to it for you. Now, Nick, we'll move on to our next section, which we talk about the things that we're kind of looking forward to either in the next week or the next month. I'll let you go first, my friend. I've got one I'm really excited about. I want to save it for last.
Oh, awesome. Yeah, we got Bitcoin Miami that's coming up in the next couple of weeks. I think it's May 18. So something just to be mindful for. Keep an eye out on potential announcements that are going to be happening. We'll hopefully come with you with a nice segment there about what's the major things that you might have missed from Bitcoin Miami. So really keen to see. There's a lot of speakers there. And actually, as we're speaking about Robert Kennedy Jr., who was championing Bitcoin just then, he actually is going to be speaking at the event. So a lot of high-profile people attending, and continue to see.
Yeah, awesome. I'd love to keep track on that, because I know from the Collective Shift team, Ben and Matt did just come from America. They went to, I forget what conference they actually went to, but they made some good connections, and they saw some VC investors, and turned out to be a really good trip for them. So I'm very happy about that. And this is the place where you get to meet all and network with people in this space. So for myself, I actually had something I'm looking forward to. It's actually next month. It's called the Web3 Convention at the International Convention Center in Sydney. I myself, I don't usually go to crypto conferences, but this one is actually affordable. Now, Nick, whenever there's a conference, especially in America, the tickets are like $2,000, something ridiculous. And only the people who are, whales already, or who are in the industry and definitely have to go, must go. So for me, I'm really excited for this. It's 2 days of the event. The tickets are affordable. We've got 200 exhibits and even more speakers coming along. So it'll only take me an hour to get there. So I'm really looking forward to it. That's what I'm going to be doing next month. And hopefully I get to interview some people.
Yeah, you're going to have to let me know how it is, because I know when I go to a couple of those, I actually come out I actually come out a bit bearish, because I see some of the people that have some stalls, and let's just say there's a lot of projects that I'm not sure how they got through the screening process to be there, because there's some outright scams or potential nefarious projects that attend these things. So it's a good measure to see how we are at the moment, to see the quality of building and stalls and applications that are at those conferences, which is a good measure of, I think, of whether we have more to go in this bear market. I think if it's full with nonsense, might be.
Yeah, definitely. I agree with that. Like if we're going down for a little bit further, then you definitely see some scammers out there, some pop-ups that aren't doing well. And that's actually a good idea. So what I'm going to do, I'm going to be looking around very eagerly. I'm going to be interviewing some people if I can, make some connections in the industry, and especially in Australia. And I'll make a report about it for the Collective Shift team. So if you guys are interested, make sure you leave a comment below and let me know what you want me to find out at the International Conference Center in Sydney. Yeah, so Nick, we've got one last section here, which is our rapid fire. Anything that we appreciated, anything that was actually overappreciated or underappreciated in the market. So let me know which one was yours.
So I'm going to be greedy here and go for two. Number one for underappreciated is a lot of the upcoming testnets that are happening on Ethereum. So as we've spoken, there's a gas is just so high in Ethereum at the moment that hopefully more of these L2 solutions can get rolled out and their security increases, because at the moment they're very centralized. But we're seeing a lot of big names not even unveil their mainnet application yet. So we got Consensus, which is the creator behind MetaMask. They're actually working on a scaling solution called Lena, which will hopefully unveil in the coming months. It's an ongoing public testnet, which is just a trial network to get all the bugs out and to work on testing. And we're also seeing Coinbase's base, which we covered a few months ago or a few weeks ago. And that one should be coming to mainnet maybe towards the end of the year, maybe early 2024. So some nice catalysts and big names that are really trying to help scale
love that.
Ethereum.
Like all these companies working behind the scenes, they don't make a lot of noise, but when they come out, they are industry shifting. I just love to see that.
And I'm not sure if you saw, I'll go for my overappreciated, was Blur. So Blur sort of took the reins off OpenSea, which was the biggest NFT marketplace for years. Blur was a recent challenger who dropped a token to try and capture a lot of NFT traders and a lot of volume. So they actually unveiled an NFT lending product into the market, which to me got a lot of coverage, but I'm kind of skeptical because when I hear lending and I hear leverage and you can actually buy now, pay later,
Yes.
when I hear these things and it's related to NFTs, which a lot of the time can have questionable value and you're unsure how sustainable these collections are. If we're seeing new market mechanisms which allow people to leverage and lend off the back of these NFTs that may not have sustainable value, then this creates another level of leverage, which I would be quite concerned about. So this is one to see unravel. Maybe there's good applications like CryptoPunks who are real historical value holding NFTs, which a lot of people won't debate that. But then we're seeing other smaller projects that could get liquidity. I'm concerned about potential over leverage now.
I definitely see your argument there. A lot of these projects out there don't actually have any intrinsic value to them. Whereas like, a CryptoPunk has historic value. People actually value that and there's a huge volume for it. So, and man, when this NFT fi starts coming out, it's going to be crazy. People are going to be way leveraged above what they need to be and they're going to be crashing down when it comes down. So for me, I think one thing that the market didn't really pick up on was the Voyager deal with Binance. So I'm sure people are kind of aware already. Voyager was like a application or platform where you could give your tokens there and you could earn some yield from that. They actually did go bankrupt for a while, and so FTX were going to buy them out. That didn't work out. Binance was going to buy them out. The US government went after Binance and said, no, you guys can't do this. This is not fair. And so the Binance deal has now fallen through. And so Voyager is stuck in a little rut. They don't know what to do. The plan at the moment is actually liquidate all of their tokens. So what does this actually mean for you guys out there? If you are a Voyager user, you're very likely to get 36% of your entire portfolio back. Now, it's not finalized yet. There is probably still some legalities to figure out. But at the moment, if you have one of the 67 supported tokens, which are mostly like Bitcoin, Ethereum, some other tokens, then you'll be able to withdraw 36% of that in Bitcoin and ETH. If you have some of the 38 unsupported tokens like Solana or Algorand, then they're going to liquidate all of it to USDC and give you that USDC back. So I guess if you want to play the market, you've got to find out which tokens are supported, which ones aren't supported, and see if the prices are going to be reacting to this, because there are some likely large liquidations coming across to these tokens. Yeah, so it's a revolving situation. Collective Shift will keep you updated. I just thought I should let you guys know because I'm not a Voyager member myself, but I am a Celsius user myself, so I'm involved there. So I like to keep on track of these things when it does happen. Yeah,
it's tough for Voyager. They, as you said, deal after deal kept falling apart as soon as I would, really feel for Voyager customers who thought they had a deal, but unfortunately, another one fell through. Man.
But Nick, I think that's a wrap for this week, my friend. If you're looking for more insights, make sure you check out our revamped weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We will see you again next week. Bye, guys.
Cheers, Liam.